How do you figure out what a company is really worth? It's a huge question for any investor. Today, we're going to dig into that by looking at ESSCOM, an energy infrastructure company, and try to uncover why its true value might not be what you see on the surface.
This question right here is really the heart of it all. Think about it. Is value just the price tag you see flashing on a screen right now? Or is it something deeper, something about what it could become? Let's unpack that.
All right, here's our game plan. First, we'll tackle what's called the price tag illusion. Then, we'll break down a couple of key numbers. After that, we'll look at the two very different types of investors, see what a difference a decade can make, and figure out the right way to value an infrastructure company. And we'll wrap up with a very direct message to shareholders. Let's get into it.
Okay, kicking things off with the price tag illusion. This is all about getting past a really common habit, judging a company's whole future based on one little number that changes every single day.
And ESSCOM comes right out of the gate with a really bold statement here. They're saying that if you're looking at their current stock price, you're missing the entire point. It's like judging a massive novel by the price sticker on the cover. You're just not seeing the story inside. ESCOM sees itself as a foundational piece of future energy infrastructure, not just a stock to be traded day to day. So, to see that bigger picture, we have to clear the air about two specific numbers that are causing a lot of confusion: the 501 par value and a $2 strategic price. Let's break them down. First off, this par value, that 501 figure, it's basically just a piece of legal paperwork, a formality for accounting. It has absolutely nothing to do with the company's real-world value, not its tech, not its future, nothing. So the main takeaway here, just ignore it. It's a completely meaningless number. Okay, so that brings us to the more interesting number. If that par value is totally irrelevant, what's the deal with the $2 per share price that some people are talking about? How did that happen?
Well, that $2 price wasn't some kind of public discount. It was the entry fee to become a high-stakes strategic partner. This wasn't as simple as clicking buy. We're talking a massive $50 million investment, a promise to keep that money in for the long haul, a willingness to share the pain if the company fails, and an active role in helping it succeed. That's a whole different ballgame.
And this whole situation really highlights a critical point. Not all investors are created equal. So that brings us to our next section, where we'll look at the difference between a regular shareholder and one of these strategic partners. And wow, the difference is night and day. On one side, you have minority shareholders. They have limited risk, no responsibility to fund the company, no duties, and they can sell anytime for a quick gain. But strategic partners, they are all in. They share the risk, they're on the hook for major funding, and they are locked in for long-term growth. So demanding the same price for these two completely different levels of commitment, it just doesn't add up. This whole idea of risk and long-term commitment is the perfect segue to our next section. We're going to shift from who is investing to how and when real value is actually made. This quote really just nails it. It's not just about how much money you have. What truly matters is where you put it and for how long. The real secret sauce to building wealth is foresight. Okay, let's make this real. Let's play a game. Imagine it's 10 years ago, and I hand you 100 million won, which is about 75,000 US dollars. What would you do with it? And here is where you see the incredible power of that foresight. If you just held it as cash, well, you'd still have your 100 million won. A bank deposit would have more than doubled it, which is not bad. But look at what happens if you had a little insight. If you had put that money in Nvidia, you'd have nearly 20 billion won. Bitcoin, over 14 billion. The difference is just mind-blowing. And here's the most important part. Everybody started with the exact same amount of money. The starting line was the same for everyone. The only thing that created those massive differences in the end was insight, the ability to see where the world was going and having the patience to let time work its magic. So all of this brings us to what ESSCOM argues is the correct way to value a company like theirs. It's not about short-term trading. It's about thinking like a long-term infrastructure investor. You've basically got two different mindsets. The short-term trader is obsessed with the daily price. For them, time is a risk. But the infrastructure investor sees time as their greatest ally. They focus on the deep structural value being built. Trying to day trade an infrastructure company is like trying to value an entire airport based on today's weather. You're completely missing the big picture. So what are these structural drivers for ESSCOM?
It's not about quarterly profits. It's the big stuff, like their government-certified technology, their long-term patents, their ability to plug into entire national energy grids, and the fact that they align perfectly with global carbon reduction policies. This is the stuff that builds real, lasting value.
A good way to picture it is like an iceberg. The argument is that the current market price is just that little 20% tip you see above the water. The vast majority of the company's value, that huge 80% structural foundation, is still hidden beneath the surface, not yet reflected in the price.
So, with all that as a backdrop, we now come to the company's official and final word to its shareholders, and they want to make their position crystal clear.
And there it is, direct and to the point. The company is flat out saying that the $2 price was exclusively for those strategic partners who met a very tough set of conditions. They're stating they have no legal or financial duty to offer that same price to anyone who isn't taking on that same level of risk.
And they're reinforcing their philosophy right here. Price is tied to risk and the terms of the investment. They say their core mission is to protect long-term value for all shareholders. And that means focusing on the fundamentals, the technology and time, not reacting to short-term pressure.
And just to make sure there is zero room for doubt, they're putting a stamp on it. This is their official, final position on the matter. It applies to everyone, current investors, and anyone who might invest down the road.
So we end right where we started, with a question for you to think about. When you look at a company, are you investing in the numbers you see on a screen today? Or are you investing in the infrastructure that will power our world tomorrow? Because your answer to that question can make all the difference. Thanks for joining me for this explainer.